Hi, I'm Bill Wilt of Assured Research. Thanks so much for joining this quick hit video where we're going to concentrate on one research note written and shared in our September Assured briefing. In this note, we talk about the economy and how property casualty insurers can do in different economic scenarios. Now, specifically, this is being recorded in late August, going back just a few short weeks ago to early August. The mindset across the country seemed to shift from the Fed engineering a soft economic landing to one where there's at least a greater risk based on weak jobs reports, the weak jobs report specifically from July, a greater probability that we might experience a hard or harder landing than previously envisioned. So we had written back in earlier in 2024 a note, kind of a Goldilocks style note, saying that property casualty insurers can do just fine in a scenario where the economy is either just right or too hot. But the worst case scenario for for P&C insurers is if the economy is too cold. Otherwise said, a hard economic landing. And before I share a couple graphs with you, let me just read what we wrote in the note, because I think that captures it succinctly. In an economy that runs too cold, the growth rates of organic demand and rateable exposure units decelerate. The Fed lowers interest rates, which lowers investment income for P&C insurers, yet liability insurers still need to price for social inflation. That'll be harder to accomplish without harming retention rates if more industries experience slowing sales and lower margins. Now, let me share with you what we have, the notes, excuse me, for graphs in this note, and then we'll conclude this quick hit video. Okay, let's see. There we go. You can probably see that. So this is these are all the companies that make up the S&P 500 by their sector of the economy. And the reason we show this is to illustrate on the left, the margins that these industries are producing, earnings before interest and tax as a percentage of revenues. And on the right-hand side, their sales growth. Accelerating or improving from year to year is shown as green, and of course red shown as decelerating or worsening. So if you look at 2025, margins are generally improving from one year to the next, with exceptions in energy, healthcare, information technology, and real estate, for instance. And they're expected to improve again in 2025. Sales growth, a bit more red, so some deceleration in 24, but looks like analysts broadly expect sales growth to accelerate in 2025. This is all well and good. This data is from early August. Probably doesn't incorporate much thinking as to the potential for a hard landing. Our observation is simply that if the economy heads in that direction, we're going to see more red in the 24 and 25 column. Simply makes it harder for P&C insurers to sell rate increases into these industries if they're experiencing decelerating margins and decelerating sales growth. And as a reminder, although we P&C professionals enjoy relatively inelastic demand for our products, that is, kind of irrespective of the price, companies need to purchase commercial insurance, property insurance, etc. The elasticity of the demand isn't zero. So especially larger corporations do have other options. Here we're happy to share data from Verisk's market stance unit, which shows the amount of self-insured premiums here expressed as a percentage of GDP by industry. And the idea is that price sensitivity, which isn't something we think about a lot in P&C, that can vary by industry. And perhaps looking at the self-insured premiums by industry as a percentage of kind of overall demand or their contribution to GDP gives some sense to especially underwriters and account managers on kind of the degree of price sensitivity that their customers in different industries could experience or demonstrate in different economic scenarios. So that's all I had for you in this quick hit video. If you subscribe to our work, great. If you don't, there are plenty of links at our website and even at this YouTube channel to get you to a sign up form where we'll subscribe you if your company subscribes. If you don't, happy to contact you and tell you how you can go about getting a trial. Thanks so much for your interest.